This 5-minute scalping strategy made me $21,000 last month, and it consistently gives me payouts like this and like this. And in this video, I'll be breaking it all down step by step, and I'll be showing you the full strategy, real examples, and a full set of 6 months worth of results to prove to you that this strategy can make you instantly profitable. Right, so the first step of this strategy is finding your key levels. And key levels are essentially areas where there's passive orders that are sitting. And I use these levels with this strategy to tell me exactly where I'm allowed to take trades or not. And by identifying and tracking these key levels, you're not only more likely to get large moves, but your win rate will skyrocket as well. And that's why I'm able to get a 60 to 70% win rate with this strategy. So to actually find these levels, it's super simple. All you're looking for are V shapes, okay? Where the market has pushed into and recovered from, pushed into and recovered from, pushed into and recovered from, pushed into and recovered from. You can see we've got a lot of these, all right? And you might start to ask yourself, okay, well, they're everywhere, right? How do I choose between using this, or this as areas to trade from? Well, I'm going to show you in just a second. So what we're going to do is mark up these zones with these vertical lines over here. And once again, you can see that there are many of them, right? We've got one here. We've got one here. Okay. We've got one over here as well. So these are the most recent areas where we've had V-shaped reactions. How do I know which one we're going to trade from? Well, it's pretty simple, guys. All we're looking to do is see how much space we have between zones, right? If we've got enough space to take trades between zones and actually bank profits, then we're going to take those trades. If there's no space, we get into a trade and it reverses on us, we're going to hit stop loss. We're not going to make money. So essentially what we're looking for here is, for example, this zone to this zone is 2.5 points. How am I going to make 2.5 points on NASDAQ when my stop loss is 25 points? Okay, here we look down here, we've got 6.5 points. That's not enough for me to get into a trade. And so I'm going to end up choosing the zones on the extremities of price right here, because we've got more than enough room to move and actually bank decent profit and have a good risk reward ratio. We can see there's another level down here. And so essentially, if I get into a trade up here with a 25-point stop loss, we are able to at least get to break even. Okay. In this case, these candles are a little small. I would use about a 20 pip stop loss. So we can get to a 1-to-1, okay? We can get to a 1-to-1 without hitting any other levels. We target a 1-to-2 risk reward ratio with this strategy. And you can see it's similar if we choose this down here. We'll be able to get roughly to 1-to-1 if we choose that zone. And if we can't, then we will use a lower zone. So that's how we choose our key levels on the 5-minute time frame. So once we've determined the levels that we're looking to trade from, what we're looking for is simply a candle body closure on the 5-minute time frame above this level here for a buy, and a candle body closure below this level over here for a sell. That's it. That's all we're looking for. So in this particular example, it's a real trade that we took with our community literally yesterday, Friday, the 12th of September. You can see price aggressively pushes down on the open. It sweeps both sides of this range, but price has not closed. It has not broken and closed below either of them, keeping us safe in this particular trade. So we look for price to break and close above. Now, we cannot just get involved in trades here. I didn't make hundreds of thousands of dollars by trading this strategy just by entering once price passes the key level. It's always been a wait for my 3 confluences. And these confluences will be the difference between you actually making money with the strategy or blowing accounts. So the first confirmation that I want to show you is that price, okay, needs to be above the 50 moving average, okay? The 50 simple moving average. Now, to add the 50 simple moving average, you're simply going to click on indicators, and then you're going to search for simple moving average and add it to your chart. Okay. Once you add it to your chart, you're just going to set the length to 50. Okay. So you can search for it here, simple moving average, and then add the length to 50. You'll have this line on your chart. Price must be above the 50 moving average for us to take buys. And if it is below, we are good to take sells. This keeps us out of choppy markets. It keeps us out of the range. Okay, it's very important. And as you can see here, we are currently above the 50 simple moving average. And next, the next confirmation we're looking for is essentially price must break and close. Okay, it must have a 5-minute candle body closure. Like we mentioned already, it cannot just break and you cannot just enter straight away. Okay, it's really, really important that you understand that you cannot FOMO in once you break past that level or once it just closes on the other side. Okay. And finally, the last confirmation that we look at is the retest. Price must come and retest the zone. Okay, you cannot just enter as price breaks. Okay, as price breaks and closes, you cannot enter. As price breaks the zone, you cannot enter. We must have price come back down and retest the zone. And what we look for is the momentum at which it comes back down. And in this particular case, we had price retest with quite a lot of momentum. Okay, and we got in at the zone. All right, we got in at the zone because price was not overextended when it broke. Okay, so we had price come back, retest the zone, push all the way down to the SMA. Okay, then we had price come back and start to push in our favor. Okay, and this is where stop loss sizing is important. We had price push back in our favor, and we target a 1-to-2 risk reward ratio with this strategy. So once we're at 1-to-1 risk reward, we then go break even on the trade. And we pushed all the way to our profit target. This trade was called in our Inner Circle community live on stream. Now, before I get into the 6 months worth of live results, I'm going to show you a couple more live trades so that you can save months of time and thousands of dollars trying to actually figure out how to trade this strategy. I'm going to be walking you through my exact thought process of how I got into these trades and how I risk managed these trades live. Then, as a bonus, while this strategy actually already works great on its own, in just a second, I'm going to show you a secret trick that boosts your win rate with the strategy a lot more. Okay, it takes it to a whole new level, and I'm going to show that to you in just a second. But let's have a look at this example over here. So as we can see, price is essentially causing lots of V-shaped reactions everywhere. Okay, and it can feel overwhelming. So let's identify a few of them. This blue line here, where the blue stops, represents pre-market, okay, and it is finished now here at 9:30 Eastern Standard Time, which is 15:30 my time. Now, let's identify some of these zones. We have a zone here where price reacted. We also have a zone down here. Okay, we're going to use this particular candle here. You can also use the box tool to just simply create a zone, okay? These lines are simply the extremity of these zones, and we often like to do that, okay? Now, we've had price open on open. We had price do something similar to what we showed in the first example. It took out both sides of the breakout, but we were safe because our confluences kept us safe. We did not have a break and closure above or a break and closure below either of these particular zones. Now, if we go on to identify further away zones, we can see that there was also a reaction here. There's also a reaction here, okay? We can also draw out this as a zone, including these wicks over here, right? Just so that you can see that it's more than just this random wick here. We chose this because it's the extremity, okay? Now, we're going to decide which of these zones to trade. So there's a couple of zones that we can potentially trade. We've got, this here, which is 3.5 points. We cannot trade that. It's not enough. We need at least 20 to 25 points on these trades, okay? So that we at least get a 1-to-1 risk reward ratio with a 20 to 25 point stop loss. So we've got this zone here, okay, which we could definitely trade. So this would be a zone that we would look at. If we push past this zone, we would then be looking at this zone, which we can pretty much go to the moon with, right? There's quite a bit of space all the way up to here, okay? Now, on the downside, if we break down, we've essentially got, quite a lot of space. We've got space up to here to get into a trade, which is around 20. I would still be cautious of this. Otherwise, we would be looking to take trades below this low down here where we've got plenty of space. Okay, so the zones that we're looking at, let's get rid of the ones that we're not looking to trade, which are these two here. So we've got this up here, we've got this potentially up here, and we've got this down here. So let's see what happens with price. Okay, so we shoot up to the upside. Okay, we have price retest on this particular zone. Okay, it comes very, very close, right? But we don't actually test it exactly. Okay, we just got missed on this particular trade. So now we break and close above this zone up here. So we would be looking to potentially get into a trade up here. We would have our stop loss at 25 points, okay? Reason being, we've got big candles. We want to cover that as much as possible. We use a maximum of 30 points for stop loss. So it's between 20 and 30 points. We target a 1-to-2 risk reward ratio with us going break even midway, halfway, okay? Which will be somewhere over here, okay, at this line. Once we get there, our price is at break even. We will put our stop loss at the entry. We get triggered in with this candle here. We come back to retest once again, and then we continue. We go into a bit of drawdown here. We then push up and we go to break even at this point, and we hit our target for a 1-to-2 risk reward ratio. Let's have a look at another example real quick. Right, so here we are on the next example. We're once again looking for our zones. Now these zones are determined where we've had price push into and push away from aggressively. So you can see here, pushed in and pushed away from aggressively. So we have a zone here. We've had price push in and push away from aggressively here as well. We're going to choose the lowest part of that zone, which is actually this candle here. And then we've got one down here as well, okay? Those are the zones that we're currently looking at. Now, I'm sure you can see, once again, there's not enough space here for us to get involved in a trade before potentially reversing. So we're going to get rid of this zone over here, okay? We've then got this one up here, which is great. We've got enough space to go all the way up here. Once again, we're looking at our 50 SMA. If we are below, okay, we're cool to take sells. If we're above, we're good to take buys. We're now going to wait for price to break and close above or below one of these particular zones. And then the third confluence is the retest, right? We look for the retest. So what happens? We break out pretty aggressively here to the downside, okay? And now we're going to start getting ready for entering. Essentially, we are below the 50 moving average. Now we're looking for the final piece of the puzzle, which is the retest. We would get into the trade as we retest here. We're going to use, in this particular example, a 30-point stop loss, which is our maximum stop loss. Why? Because of the size of these candles, we want to cover as much of it as we can, okay? And also because of the volatility. We're going to target a 1-to-2 risk reward ratio like normal. And once we get to midway, okay, 50% of that, and we have a nice push below that, we're going to go break even once we have a nice push below the 1-to-1 mark, okay? Let me keep that line there. So price then tags us in on this candle over here, and then we push lower, we go break even, and we hit take profit, all within the space of about 10 minutes. So this was a lovely fast trade and a great example of how the strategy can work, and how you don't need a complicated strategy to make things work super well. Now, as you can see, strategy works really well, but for the next example I'm going to show you, now, as you can see, the strategy is pretty good, but we taught our students an extra filter, an extra secret to the strategy that pushes the win rate up even higher and allows you to avoid unnecessary losing trades. And that simple filter is identifying structure on the 4-hour time frame. Without just being on the 5-minute time frame all the time, we want to be looking and being mindful of what's happening on the higher time frame as well. And what we're simply looking to do is identify again reactions on the 4-hour time frame and mark out those zones so that we are cautious in those zones, potentially not taking a trade in those zones or risking down when we are close to those zones. But in general, we want to be taking trades away from those 4-hour zones. Let me show you what I mean. So up here, you can see there's a clear reaction on the 4-hour time frame. And if we go back a little bit further, you can see there's clear V-shaped reactions in this zone down here. Now, what we would want to do is mark up these particular zones. Okay, it's not an exact science, but we want to know what's going on the 4-hour, have it marked up so that we have a roadmap and a framework to follow so that we can get into more high probability trades. So once you've marked up these zones, essentially what you're going to want to be doing is, for example, if there's a sell trade setting up over here, you're not going to want to be selling into this brick wall of price over here. Okay, it's low probability. At the very least, you're going to want to size down a lot if you get into a trade over here. What you ideally want to be doing is looking for buy over here only, okay, because you're looking to buy into open space. Same with this. If we are currently up here, you're not going to want to buy into this brick wall. You're going to want to be taking sells away from it or waiting for price to break out of the zone and then take buys above here, okay? And that's how the 4-hour time frame helps us stay out of unnecessary losses. Now, if you traded the strategy for 6 months straight, here are some of the results you could have gotten. This comes from all of our live trades that we take with our inner circle members every single day on stream, which is all recorded and documented in our public Discord. So each of these trades are video recorded, and it goes all the way back to June last year, all video recorded. So if we look at just 2025, in January, we had a bit of a choppier, slower month. We were down 1% in January. But in February, we came back, kicked ass, got 7%. Then in March, we came back even stronger and made 12%. This is if you're risking 1% per trade. And if you can imagine that on a 100K prop account, that's $12,000. Then in April, okay, this is week by week over here, we had a total of 5%. Our May was a little bit slower, and we basically broke even for the month of May. And you can see here, every week we're posting updates. And then in June, we managed to get a 10% return in June with a 70% win rate. So that's what you would get if you traded this for 6 months live. We traded this all on stream with our private inner circle members. We recorded and post all of the results in our public server so that our public members who can join for free, you can join in the description below, you can learn from our trades that we've taken with our private group and see the results for yourself. So if you want to join that, the link is in the description below. Thank you very much for watching this video. I will see you guys in the next one. Cheers.